This is Thoughts on Investing. Today, we're breaking down Roblox, not just as a game, but as a platform the market may be underestimating right now. Let's start with what Roblox actually is, because this is where most people misunderstand the company. Roblox is usually called a game, but in reality, Roblox is a platform. It's a platform where users create games, worlds, and digital experiences, and other users spend time inside those experiences. Roblox doesn't rely on one hit game. It relies on millions of creators constantly building new content. That's a very different model from traditional gaming companies. In fact, Roblox is closer to a mix of gaming, social media, and a creator economy than it is to a normal game studio. And this matters because platforms scale differently. Now let's talk about scale, because this is where Roblox really stands out. Roblox is one of the most used games in the world by daily active users. In many periods, it has more active users than almost any other single game. People don't just log in for a few minutes. They spend a lot of time there. On average, users spend close to 3 hours per day on Roblox. That's an enormous amount of engagement. And engagement is the hardest thing to build in tech. Now here's where the numbers make this even clearer. Roblox has well over 150 million daily active users, and that number has been growing steadily. Over the last year, the company generated roughly $4.5 billion in revenue, growing more than 30% year over year. Even more important than revenue are bookings, which represent how much money users are actually spending on the platform. Those bookings have been growing even faster, with recent quarters showing very strong growth. So this is not a small company, and it's not a declining platform. The reason people underestimate Roblox is simple. It looks simple. The graphics are basic. The games don't look realistic. And because a lot of users are younger, people assume the business is weak. But simple doesn't mean small. Roblox has massive scale, extremely high engagement, and a business model built around creators and recurring spending. That's why Roblox isn't just a game. It's a digital platform with real economic activity happening every single day. And understanding that is the key to understanding the rest of this story. Now let's address the biggest criticism directly. People say, Roblox is just for kids. That used to be more true years ago. It's much less true today. Roblox's fastest growing user segment is older users, teens, and young adults. And even more important than age is engagement. Roblox users don't just log in and leave. They spend a lot of time on the platform, hours per day, week after week. That level of engagement is extremely hard to create and even harder to replace. And here's the key point. Kids grow up. If Roblox keeps users as they age, and the data suggests it is, then Roblox isn't a kids company. It's a generation platform. That's very powerful. Now let's talk about the money side, because this is where Roblox confuses a lot of investors. Roblox makes most of its money through Robux. People buy Robux, spend it inside games and experiences, and Roblox takes a cut. But here's the key detail. Roblox doesn't record all of that spending as revenue immediately. A lot of it gets recognized over time, which is why Roblox focuses heavily on bookings as a better real-time view of what users are spending. Now for the actual numbers. In Q3 2025, Roblox reported $1.36 billion in revenue and $1.92 billion in bookings. It also produced strong cash generation. Operating cash flow was $546 million, and free cash flow was $443 million in that quarter. Management's full year 2025 guidance calls for $4.88 billion in revenue and around $6.62 billion in bookings, with free cash flow around $1.18 billion. Even though Roblox still reports losses, the business is clearly generating real cash and real spending activity on the platform. On profitability, Roblox is still not there yet on earnings. Trailing EPS is around negative $1.43, which is why the PE ratio is negative, roughly around minus 60 recently. In plain terms, the company is still losing money on paper, so a normal PE comparison doesn't really work the same way it does for mature companies. So why are earnings still negative while cash flow is improving? Because Roblox is reinvesting heavily into the platform. Creator payouts, infrastructure, safety, and growth initiatives, and revenue recognition happens over time. That's why the profit later story exists here. Roblox is choosing to build and defend the platform first, while the financial model gradually catches up as scale improves. Now let's break down both sides of the story, the bear case and the bull case, and put it in context with other games and platforms. The bear case. First, critics will point out that Roblox is not profitable yet. On a traditional accounting basis, earnings per share are negative, and the P/E ratio can't be meaningfully calculated because the company is still running at a loss. People also worry that Roblox faces competition from other games and platforms that have massive audiences, like Fortnite, Minecraft, or even mobile heavyweights like Call of Duty. Those games attract millions of players and monetization in their own ways, often with stronger profitability today. From that angle, some investors say, why own Roblox when there are big, established gaming brands that already make profits? That's a fair question. Also, Roblox's engagement can be skewed by age demographics. Some still think of it as a kid's playground and worry that if older players never fully adopt it, growth could slow. And finally, because Roblox doesn't generate traditional profits yet, some investors treat it more like a speculative growth play than a mature business. That's the essence of the bear case. The bull case. Why I'm leaning bullish. Now here's where I think a lot of people are misunderstanding the story. To see this clearly, we need to compare Roblox to traditional game companies. Most games today, even the biggest ones, are single products. Fortnite is one game. Call of Duty titles sell one experience at a time. Minecraft is one persistent world. These games need constant content updates and new releases to stay relevant, and their monetization usually depends on seasonal releases or new paid content. Roblox is not that model. Instead of owning one game, Roblox is a platform that hosts millions of user-generated experiences. Some of those experiences behave like games, some like social spaces, some like mini-apps, and new ones are created all the time. What that means in practice, engagement doesn't depend on one title staying fresh. There's always new content being built. Creators are financially incentivized to keep users coming back. Compare that to traditional games, even big ones. Fortnite has huge user numbers, but it's still one ecosystem. Roblox is more like YouTube meets gaming, where users both consume and create. That's a fundamentally different model. And when we compare engagement, Roblox holds up well. While exact real-time rankings vary, Roblox has consistently shown user engagement metrics comparable to some of the most played games in the world, especially among younger audiences. People spend many hours on the platform, often more than they spend on single games. That scale of engagement matters. Traditional game companies generate revenue from selling access to games or in-game purchases. Roblox generates revenue from ongoing spending across millions of experiences. Every time a player buys Robux and spends it in any world on the platform, Roblox earns. And this spending isn't tied to just one game being hot at the moment. That's a different kind of monetization, a recurring ecosystem model. So when we compare a traditional game that has to release new hits versus a platform that hosts countless hits created by others, Roblox doesn't just compete on content. It competes on ecosystem stickiness. That's why even though the company isn't profitable now, it's creating real economic activity on the platform. Creators are earning from their games. Users are spending money consistently. Roblox is taking a cut. That's a functional economy, not just hype. Why the bull case matters more at these levels. And here's the key point. The bull case isn't Roblox will become the next $1 trillion company overnight. The bull case is Roblox is already doing what it set out to do, build a gamified social platform with real economic activity, and the market hasn't fully priced that in yet. The stock isn't priced for perfection. It's priced for uncertainty. That uncertainty creates opportunity. If the platform continues to generate engagement, grows bookings, and monetizes better over time, even modestly, the stock doesn't need explosive growth to outperform. In contrast, traditional games are often valued more closely to near-term earnings and hit cycles. Roblox doesn't fit that mold, and that's exactly why some investors are still underestimating it. Now let's take a look at the Roblox chart, starting from the IPO. Roblox went public in 2021, and early on the stock surged quickly, reaching around $142. After that, it went through a very sharp decline, eventually dropping all the way down to around $21. What I like about this structure is what happened next. Instead of continuing lower, the stock spent a long time moving sideways. From roughly 2022 through 2024, Roblox traded in a wide range, which helped absorb all that selling pressure. In simple terms, the stock was resetting. Now, more recently, we're seeing something important. Price has finally broken out of that long range and is starting to trend higher again. That's a meaningful change in behavior. If you look at the chart, this move is becoming very clear. On the daily time frame especially, the structure looks like a cup and handle pattern. You can see the large rounded base. That's the cup. And now price looks like it's starting to form the handle. This doesn't mean it's guaranteed to play out, but the setup looks constructive. So how do we think about entries? One simple way is to use Fibonacci retracement levels from the most recent swing low to the swing high. Those levels line up with an important area in the low to mid-70s. If we zoom back out to the weekly chart, this area makes even more sense. Around $70. We have a level that acted as resistance earlier in the cycle and now could act as support. That's often where price pauses, builds a base, or bounces. Because of that, I'd think about scaling in gradually between 70 and 75, rather than trying to pick an exact bottom. As for the upside, the first clear target is the previous all-time high. From these levels, that's roughly a 2 times move. And after a long consolidation like this, it wouldn't be unusual to see price range for a bit, then continue higher if momentum stays strong. So overall, from a technical perspective, Roblox looks like a stock that has already gone through a major reset, built a long base, and is now starting a new upward phase. So let's wrap this up. Roblox is not a safe haven. It's not low risk, and it's not for everyone, but it is one of the most used gaming platforms in the world, a powerful creator ecosystem, a long-duration growth story. And at current levels, it looks like a reasonable place to take calculated risk, especially for a trade. The biggest mistake investors make with Roblox is judging it like a traditional game company. It's not that. It's a platform that's still evolving. If you enjoyed this video, please don't forget to like and subscribe as it helps a lot, especially for a channel that is just starting like mine. And remember that nothing in this video is financial advice. I'm sharing my personal views and research for educational purposes only. Roblox is a volatile stock, and prices can move sharply. Always do your own research and consider your own risk tolerance before investing.